welcome back. Today we're tackling a massive topic in the crypto world, MiCAR 2025. If you're into Bitcoin, Ethereum, stablecoins, or even DeFi, this is something you need to know about. MiCAR, short for Markets in Crypto Assets Regulation, is Europe's big new plan to regulate cryptocurrencies, and it's already starting to shake things up. In this video, I'm going to break it all down for you. What it is, who it affects, the new rules, and what's coming in 2025. By the end, you'll be a MiCAR expert. Well, close enough. So stick around, hit that like button if you're excited, and let's dive in. All right, let's start with the basics. What exactly is MiCAR? MiCAR stands for Markets in Crypto Assets Regulation, and it's a new law from the European Union that's all about bringing some structure to the crypto space. Picture this. Before MiCAR, crypto in Europe was like the Wild West. Every country had its own rules, or sometimes no rules at all. Germany might say one thing, France another, and it was a mess for businesses and investors trying to figure it out. MiCAR changes that. It's one unified framework for all 27 EU countries, designed to protect consumers, keep the financial system stable, and still let crypto innovation grow. The EU started working on this years ago, officially passed it in June 2023, and now it's fully rolling out. Some parts, like rules for stablecoins, kicked in on June 30th, 2024, and the rest went live on December 30th, 2024. So as of right now, March 2025, we're deep into MiCAR territory. Whether you're trading crypto or building a blockchain project, this is the new reality in Europe. So, who's actually affected by MiCAR? Pretty much everyone touching crypto in the EU. Let's break it down into three big groups. 1. Crypto Asset Service Providers, or CASPs. These are the companies you probably use every day, like crypto exchanges such as Binance or Kraken, wallet providers, or even custody services. If they want to keep operating in the EU, they need to get a MiCAR license. Starting January 2025, they can apply, and existing providers get an 18-month grace period until July 2026 to fully comply. No license, no business. 2. Issuers of crypto assets. This is anyone launching a new token. Say you're creating a stablecoin pegged to the euro, or maybe a utility token for a gaming platform. You've got to follow MiCAR's rules, like publishing a detailed white paper explaining your project and its risks. For stablecoins, those rules started back in June 2024, and issuers had to prove they've got reserves to back their coins, like a bank showing it's got cash in the vault. Number 3, investors and everyday users. If you're just holding or trading crypto in the EU, you'll notice changes too. Exchanges might ask for more ID checks because of anti-money laundering rules. You'll also see more transparency, like clear warnings about how risky crypto can be. But it might also mean less privacy, especially if you're using unhosted wallets or privacy coins like Monero. Now let's dig into the rules themselves, the heart of MiCAR. The EU splits crypto assets into 3 categories, and each has its own playbook. 1. Asset Reference Tokens, or ARTs. These are stable coins tied to a basket of assets, like a mix of currencies or gold. Think of something like Tether if it wasn't just pegged to the dollar. Issuers need to keep liquid reserves, publish regular audits, and have enough capital to cover losses. These rules started in June 2024, and big stablecoin players have been scrambling to comply. E-money tokens, or EMTs. These are simpler stablecoins tied to just one currency, like a digital euro. Only banks or licensed e-money institutions can issue them, and they've got to back every token with real cash. Same deal as ARTs. Audits, transparency, and strict oversight, also live since June 2024. 3. Other crypto assets. This is the broad category, everything from Bitcoin to NFT project tokens. Issuers don't need reserves, but they do need to publish a white paper laying out what their token does, how it works, and what the risks are. These rules fully kicked in December 2024, so every new token launch in the EU has to play by this book now. Then there's the travel rule, which started in December 2024 too. Every crypto transfer, say sending 100 euros worth of ETH, needs to include sender and receiver info, just like a bank wire. It's all about stopping money laundering and fraud. Plus, CASPs have to act responsibly. Keep your funds safe, avoid conflicts of interest, and report anything shady. Oh, and market manipulation, like pump and dumps or insider trading? Totally illegal now, just like in the stock market. So what's coming in 2025? This is when MiCAR really flexes its muscles. CASPs started applying for licenses in January 2025, and they've got until July 2026 to get everything squared away. That's a big deal. Some smaller exchanges might not make it if they can't meet the requirements. For users, expect tighter KYC checks everywhere. Sending crypto anonymously might get harder, especially with unhosted wallets, those ones you control yourself, not through an exchange. Privacy coins could face pushback too. And DeFi? That's the wild card. Fully decentralized projects might slip through the cracks, but if there's a company or team behind it, they might get roped in as a CASP or issuer. The European Securities and Markets Authority, ESMA, is also dropping new guidelines. Just this month, March 2025, they released one about when a crypto asset counts as a financial instrument. More clarity's coming, but it's still a moving target. And that's MiCAR 2025, folks. It's a huge shift for crypto in Europe. More rules, more oversight, but maybe more trust too. Will it make crypto safer and stronger, or will it scare off innovation? I want to hear your take. Drop a comment below and let's get the discussion going. If you enjoyed this deep dive, give it a thumbs up, subscribe for more crypto breakdowns, and hit that bell so you never miss an update. Thanks for hanging out with me, and I'll catch you in the next video.